Elon Musk says that Tesla is at a fork in the road, quite literally, installing a fork next to the road. Now, a fork in the road metaphor, you guys may have heard this before, but let me refresh you on the actual meaning. A fork in the road is a metaphor based on a literal expression for a deciding moment in life or history when a choice between presented options is required, and once made, the choice cannot be reversed. If I were arguing for what this means, I would say it's Tesla taking the choice to focus on FSD and autonomy instead of taking the path of, let's say, Toyota that does not focus on that just focuses on selling and producing as many cars as possible. And I'm like 95% sure that's what this represents, unless there's something else that we don't know coming. And if that's the case, I do think this path taken, this fork in the road opportunity, if you will, is one that will heavily benefit Tesla shareholders and probably not the too distant future. As I've explained here on this channel many times before, at some point over the next 6 to 12 months, I do think the focus will shift from the GPU providers, the TSMCs, the Cadence systems, all of these AI names today, to the appliers of AI. At some point, these companies that are buying the pickaxe and shovels, if you will, of AI, which are the GPU capabilities, will have to see return on investment. There will have to be applications of AI that change the world with this kind of investments. And I think there is no other clear winner other than Tesla. Of course, will Google, will Apple, will Microsoft, these other companies be successful in AI and have great products over time? Yes. But one, we have no idea what those are going to be. And number two, those companies are multi-trillion-dollar companies. It's not going to move the needle. Whereas Tesla is in that sweet spot of having all of these qualifications, a successful company, successful brand, visionary CEO, but they're actually aggressively focusing on applying that AI, and that will have a big material impact on Tesla's fundamentals in probably the not so distant future. But again, Wall Street prices that in ahead of time. So if Cathie Wood is right, which she said yesterday, that the Tesla robotaxi network could launch in 2025, you are going to see Wall Street start to price that in very soon. So I guess naturally Tesla is my biggest bull case for 2025. Let's face it, if we have a soft landing, Tesla stock is going to rocket higher. Now, unfortunately, I don't think we'll know if we're going to have a soft landing with any degree of certainty, at least until April of 2025, or call it mid-year 2025. If we can get to April through June and still have the same old economy that we have now, the probability of a soft landing is going to dramatically increase. Unless, of course, if there is some unforeseen event, some large bankruptcy, another banking crisis, a World War III event, something along those lines, could definitely throw a wrench in this. But for now, it's a waiting game. But in that soft landing thesis, I do think two themes will be huge. I think the broadening out of our markets will only expand because clearly it kind of needs to. Big tech is trading at a much higher multiple than the rest of the markets, which is understandable via the strength of those companies, the earnings growth power that those companies have. Sprinkle in there some AI, endeavors or hope or whatever you want to call it. There's a reason why big tech trades at a 27 times multiple, but the rest of the markets actually look pretty attractive, with the median stock trading 16, 17 times next year's earnings. I think you will continue to see a broadening out of our markets, but you will also see a theme under the surface, which is these AI appliers that start to see some pretty big rallies as well. That would be Tesla. That would be other software names, maybe an Upstart, for an example. So AI lending company, AI healthcare companies that are trying to revolutionize the way that drugs get approved, right? Some of these companies, even CRISPR, you could say for that matter, data center plays, Oracle could probably continue to do well. That's the two main themes that I can see right now for 2025. And Tesla, I think, is going to be a focal point of that as long as we have a soft landing. I think it's just a matter of time. Now, Elon Musk does confirm that there is no meaningful efficiency difference between inductive and conductive charging if the system is designed right. There's always an inductor somewhere in the charge circuit. This is after Tesla confirms efficiency is well above 90%. This is, of course, for Tesla's new wireless charging technology that is going to be the thing that charges the Cybercab and eventually could be the thing that charges Teslas on the road or at your home as well. But that was a big concern that some people had, was if the efficiency is 75% or 50%, it's going to cost a lot more to charge your Tesla the same amount. Eric Quinnell, the lead behind Tesla's Dojo Fabric, has announced he has left the company. Quinnell was with Tesla for 3 years. In other news, it's being reported over in China that Giga Shanghai will start producing the closed loop of the new Model Y next week, with initial production that won't be too much. One of those situations, most likely, where they start production on at least a few of these vehicles and then figure out where they can improve, which is normally how that works. Now, as far as Tesla stock short interest of free float, it sits at 2.65% short interest of free float. You have $16.28 billion currently sold short in Tesla stock, still a very large amount, although this is down 35.3% in the last 3 months. So short sellers have actually been covering on short positions pretty aggressively in the last couple of weeks and months. And I would argue a lot of that has to do with the expectations for 2025. Things are going to get better for Tesla. Tesla went through a doldrum the last couple of years. Tesla went through hell the last couple of years. And Tesla managed that exceptionally well. That is the difference between a poorly run company and a well-run company. A poorly run Tesla would not be $220 per share right now. A poorly run Tesla would be, say, down 70-80% from all-time highs right now. Tesla could be a $50 stock right now if it was run the same way that, let's say, Rivian is run. I mean, not to like super pick on Rivian here, but they didn't even order enough supplies to build the trucks that they already sold. It's hard enough to try to sell $70,000, $100,000 vehicles in this kind of economy with rates the way they are, but you're selling the vehicles, but you didn't order enough parts to make them. Like, that's just bad management. Tesla is superb in their management. Tesla's ability to cut costs and still be profitable. This whole time, Tesla has still been profitable for, the last couple of years. They went through hell and back. 2025 is destined to get better for Tesla, especially if we do get many rate cuts. And let's be honest, I think Wall Street bidding up treasury yields, making it more unaffordable to get things financed. Ever since the Fed cut rates 50 basis points on September 18th, there's been this whole Trump trade that says we're going to have higher inflation. Let me tell you right now, I was just telling people about this last night. That's bullshit. That's bullshit. We're not going to get higher inflation just because Trump is president. Inflation is government spending. Milton Friedman said, corporations have always been greedy. They've always been greedy. They're no greedier now than they ever were. He also said that consumers have always spent all of their money. That's never changed, at least not in America. The only thing that changes is how much deficit spending the government does. So inflation is the government. If you have less government spending, sure, we're not going to be running at 3.5% GDP because that's a propped up phony number anyways. But you're going to have less inflation, which is going to allow the Fed to cut rates and to actually see where a neutral rate is after all. Because, I mean, let's face it, inflation could actually turn to deflation, which the Fed does not want that. So you could actually see rates fall to 1-2% if we start to get some deflationary inflation reports. And in that scenario, you're going to really start to propel the economy in a way that perhaps we can't even imagine. And I think Tesla would be the main beneficiary of that. Even think about this quite logically. A lot of people have bought Teslas in North America, in China, around the world over the past 4 to 5 years. The average, if you will, refresh cycle on a new vehicle is 7 years. Most people keep their vehicle for about 7 years and then they get a new one. The pandemic was almost 5 years ago. Like, there's a lot of people that are going to start to roll over and say, I want a new vehicle. And, you know, Tesla's going to benefit from that, right? Especially if Tesla starts to offer this cheaper, lower priced Tesla in the first half of 2025 as scheduled. Keep in mind, Tesla reports earnings this Wednesday, and that is going to be the biggest catalyst for Tesla stock. What they have to say about the Model 2, the cheaper priced Tesla, if that's still coming in the first half of 2025, it's going to be off to the races this week for Tesla stock. We'll talk about this a little bit more in the next video. But from that standpoint, again, just to circle back, I have a very strong bull thesis for Tesla stock next year as long as we avoid a recession, because I don't think Trump's going to cause inflation the way that the markets are pricing in. The markets are pricing in a Trump win, number one, and Trump will cause more inflation via tariffs. People don't understand this. Still, Trump talks a big game. He says, oh, we're going to slap a 200% tariff here and 25% there and 2,000% there. No, it's negotiating. He's negotiating. If you start at 1,000% tariff and you work down to 30% or 10% or whatever it is, if they were paying 0 before, that's a win. You're negotiating. So I think Wall Street is dead wrong on that. I don't think we're going to get inflation. If anything, we're going to get probably deflation, especially in the second half of 2025. And Wall Street's going to realize they are dead wrong. Rates are going to plummet, and that's going to be good for business for Tesla. Because if we can truly get back to something like 2019 or 2018, 2017, 2016, where inflation was really low, and you don't have to have a high federal funds rate. You wouldn't, right? If inflation's low, that suggests the neutral rate is low. And I think the Fed raising their targets of the neutral rate will sharply be reversed just within a couple of months after inflation starts to come in really low, or even deflationary. You get 2 deflationary inflation reports in a row, Wall Street's going to start bringing down their neutral rate expectations. Question is that coupled with a recessionary-like environment? And that's the bigger question. I don't think it has to be, but it could be. Nonetheless, we will go over more of this in the next video. I did go on a bit of a rant, a tangent there. I hope you guys found some perspective out of that. It's one thing to think something and then to have someone else reiterate maybe some of your same thoughts, hopefully is refreshing. But those are just my beliefs. I could be wrong. 2025 could be a disaster, high inflation, recession. That could happen. Of course, that's still on the table. We shouldn't take that off the table, at least until maybe April to June of 2025. But I do think there's a very strong bull case for Tesla that well outweighs the bear case for Tesla. And the bear case for Tesla is simply we go into a recession and people stop buying Teslas or stop buying as many Teslas. And that's clearly the bear case. Now, getting back to some of the data here for Tesla. On Friday, you had 68 different trades in the options market via hedge funds and institutions, totaling $154.5 million, positive order value of 56%. Markets are sitting in extreme greed territory, coming in at 75. On Thursday, you were at 71. So you did see a big jump in the CNN fear and greed indicator. Percent of stocks trading above their 50-day moving average did go up on Friday to 68.5%. That was up a third of 1% on Friday alone. So not a great day, not a terrible day, kind of a neutral day. Currently, sentiment for Tesla heading into this week is neutral at 47, message volume is normal at 47, and the participation ratio is high at 55. Google Trends data seems to be slightly uptrending for the Model 3, the Model 3 now at 34, the Model Y at 34, the Cybertruck at 38, the Model S at 14, and the Model X at 10. So let me know what you think about all of this information down below in the comment section. In the next video, we will specifically go over my expectations for this upcoming week, the economic data that we have, the earnings that we have, which earnings will be important for the markets, and much more. Specifically, my expectation for how Tesla stock will do following their earnings. Really, again, it comes down to the Model 2 or the lower priced Tesla that we are going to get. And we'll see. There could be some big surprises in store for this upcoming week. We'll talk about it. Let me know what you guys think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time as well, earnings season is the best season. We have a very specific strategy that we like to employ for earnings that tends to have a very high win ratio that gives you skin in the game while preserving or trying to at least preserve your initial capital. It's about getting in positions, making them free, riding free positions, and a specific time frame where this tends to work well when IV ramps up heading into those earnings reports. Very exciting strategy. Tends to have a couple big winners, couple, multi-1,000% winners every earnings season. So we'll see if that happens this time around. No guarantees, obviously. You could lose all of your money if you do not have discipline, if you do not trade with logic. So I'm not a financial advisor. I'm not a financial planner. Keep that in mind if you do join. Nonetheless, you guys have a safe rest of your day. I will see you in the next one.